Hello, everybody. Welcome to our market profile equities case study of SAVA Technologies Incorporated. I'm your co-host, Ray, aka All Day Ray, and we'll be led by vwaptrader1, aka JJ. JJ, what do we got in store for us today?
Hey, Ray. Well, we're trying to look at market profile and see if it can give us an edge in trading some of these high flyers now that they have good institutional ownership and decent order flow. Let's see if we can trade them technically and maybe help see if structure can help us. Give us a bit of an edge.
All right, let's find out.
Okay. So the stock opened on a gap, and this was on the 2nd of January.
Mm-hmm.
And so what happens with me is I won't trade. You can see that we opened up at $7.23 up at the orange letter
The
there,
orange letter, yep.
and immediately auction down. You open on a gap, you come down. There's that gap and trap, and they fill all the orders all the way down till around 625, and that pretty much established the low of the day. The next period was the same, up and down, and we saw C and D periods and E periods basically putting in some selling. And when that happens, wholesale will sit there and absorb all of that selling. And you can see that a lot of time was spent at that $6.60 range, and some good volume was put in there, just under 660.
Mm-hmm.
Now, we want to see if that buying, is that short covering or is that real buying? Now, if that's real buying, as the selling wears out, price should go higher, and that big chunk of volume down there under 660 should be protected.
Mm-hmm.
And that's exactly what we start to see, right?
Mm-hmm.
We know that the size dynamic traders, the guys who move the market and ladies, they'll protect a position when they don't see a big size seller. So what they'll do is they'll buy all the stock from retail weak-handed longs as they sell into the size bids of what we call wholesale, and they'll accumulate. And we see that in the profile, as the profile will almost have like a rounded B shape to it. And
Mm-hmm.
that's they're liquidating into wholesale hands. And then what we do is, after that, we see the concept of one-time framing, where after that E low, which does not take out the day's low, that's one quick tell.
Mm-hmm.
You see the successive periods, G, H, I, what we call one-time framing, and that tells us not to get short. Okay,
Right.
that's a sign in profile trading not to get short when the lows don't take out the previous period's low
Mm-hmm.
by at
Right.
least 2 ticks. So that tells us not to get short, and it tells us the sellers are drying up. Now, this G period is inventory adjusting. They're still selling. They'll take a little while. It's not going to be immediate. When you're a wholesale trader, you will hold a stock down sometimes and make them sell to you and clean out all of that loose stock. There's a reason for that, because when you take the stock back up, you don't have people selling in your face. We've done what we've called is we clean out the overhang.
Mm-hmm.
And you can see that, and you can see that every time they came there, the E low held, and they
Right.
couldn't take it out. And you'll see a lot of up and down price action. It's kind of like it's like when you're washing clothes on a rock, back and forth, right?
Mm-hmm.
Getting all the dirt out, and the dirt are the weak-handed longs.
Right.
There, right? Now, the H period comes along, and the overhanging supply now has been just completely flushed. They own it all, right? So as they start taking it up, we get over the halfback, which is that little white dot in A period, and we start auctioning up. As we start auctioning up, we'll start taking out stops above D and C's high, and that'll create even more buying, right?
Mm-hmm.
Which is nice for the longs, right? That wholesale inventory long from 660, now they can start piecing it off once we get up into the sevens, right, and selling it.
Mm-hmm.
As we run the stops, that creates buying, and wholesale can liquidate into that buying. That buying is from people covering their shorts, and it also comes from people who chase price, because they're chasing the price up. So now wholesale is filling them and
Mm-hmm.
liquidating, a good amount of size into their buying. And then you can see, the K period stop run of B, right? It creates even more buying. So uh, people say, well, wholesale, remember, this is stock trading, and most of these smaller stocks, there's only 2 or 3 or 4 market making firms that get most of the order flow. So if you're getting 20 or 30% of the order flow, and a stock trades, if a stock trades 100 million shares a day, and you're getting 20 million shares on that, and even if you can scrape out a nickel or 10 cents on 20 million shares, that's a nice day's pay as a market maker, right? And then you'll have size traders who will buy 1 million shares and make 40 cents on 1 million shares, right? Because they trade in the day time frame, and they have their wits about them.
Mm-hmm.
And they can liquidate quite nicely, right? Uh, and this is the relationship between retail and wholesale, and this has existed ever since they used to trade out on the street in front of the New York Stock Exchange 200 years ago. There's wholesalers and retail people,
Mm-hmm.
and and then the next day you can see that very clearly. I'll just go over this really quickly. I kind of look at 2 days. The next day, that A period opens up, and we cannot get to the point of control, that purple line at 660, where price was protected. And then once again, when you see that, you know that the selling's really not that heavy. And then B period cannot take A period. We have 3 ticks of excess, so that's good excess.
Mm-hmm.
C, D, and E periods, what they call one time frame up. And it's a very 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 do not get short when this is happening. uh, you know
Yep. Mm-hmm.
because if I can save people from getting short in the hole, when you see things like single prints and one time framing, don't short against that, because that's the market telling you, look, we've got some strength here, right?
Right.
And you won't see that anywhere else other than in profile trading, the
Mm-hmm.
concept of one time framing and the concept of single prints. And you can see in the next slide, when F period, E and F period here, when they break, retail chases it, and the smart money long inventory can ease out profitably into the retail buying. If you sell judiciously, that'll cause price stability, which attracts more retail. And we keep one time framing up, safer to go long or step aside. You don't want to step in front of this on the short side. And then as soon as we break the A period high from the previous day, we get what you call single prints, which is short covering and emotional buying. And you can see
Mm-hmm.
it just ripped. We had single prints from 7:30 all the way up. And then, for example, if you want to take a trade later in the afternoon too, you can take a trade and use the single prints as your sort of thesis. You got single prints coming, so you see your long, you see your stop, and you have your target. So you're still one time framing up, which means every successive low is higher in every period. This sort of way to organize the information. Then you see that purple line right there in the volume part, which means the volume has moved up now. So the people who are buying at 660, they're up there now. They're liquidating into this move, right? As they well should.
Mm-hmm.
And and that makes some really really nice trading. And your risk isn't really that crazy. Of course, every once in a while you're going to get stopped out because there's going to be a stray order, and that's just the nature of trading.
Mm-hmm.
And then, of course, the M period at the end of the day is inventory just dumping out because nobody wants to hold this thing overnight because of so many people trade in the daytime frame. And I think in this case it was the weekend. But you know, it's a very very nice way of organizing information. Another thing I like to do is when I start trading a deal is I like to find deals that will have maybe a week or two of trading, and they'll run, stop, run again, rest, run again. So what I do is I look at the float. I do a quick float analysis to see the structure of the company. Having taken over a couple of hundred companies public, or helped take over a couple of hundred companies public, I know the way you structure a company affects how it trades. So if the structure is tight, meaning that there's not a lot of stock available, in this one there's only 11 million shares, which is nothing for funds, under $10 especially. That's not a lot of money for them. 41% is held by institutions, 15 by insiders. So 56% of that stock that's available for trade is tied up. 24% of it is short. So with 80% of the free trading shares and the floating supply locked up, you can see this is a really good recipe for a short squeeze. You shouldn't be on the short side of this trying to get a borrow. You should be taking the long trades using Profile, and what we teach with reading price action and float analysis to, look at who owns this stock: Renaissance Technology, BlackRock, Vanguard. I mean, you've got the most sophisticated money managers in here, and they own the stock. So you know that it's not some, it's not a crew of wise guys running this thing. You've got good, solid institutions, right? And so you get some really nice price action with these things.
This is not Webistics, huh?
No, it's not Webistics. You don't have Chris Moltisanti, pushing this thing. So it's it's something and this is something that I found, and I have to say that under $20 market, under $5 market is traded by some very, very decent institutions, and good funds who are like ex-Morgan Stanley guys and stuff like that. So, they have price stability, they do things right, and they'll take their time and build it. So you can get a couple of runs out of these things once you know who the holders are. Mm-hmm. So there's a lot of tricks that I look at when I'm coming across trading equities, because I come from a market making background and a deal structuring background, so I know what to look for in the trading. So come take a look and spend some time with us.
Mm-hmm. Yeah, absolutely. Good stuff, Jay. I mean, if you guys want to learn more, you come visit us at microefutures.com. Rooms open 24/7. We got screen sharing with our one and only JJ live on the microphone. It's recorded daily, so if you can't make it live, we have a training library to help you guys get caught up to speed for those who are new to Profile. And we have a very pleasant, supportive community of members. There's the daily schedule for you guys to look through. JJ, I want to thank you. That was good stuff, good analysis. I appreciate everyone listening. Anything else for the people?
Yeah, just contact myself or Ray on Twitter if you have any questions. We're always available. We'd love to help. And telling you, once you guys start looking at the structure of markets with this profile, you won't go back. It's once you start trading one stock, it's like potato chips. You can't just eat one. So you'll start looking at everything with Profile and looking that there is a structure, and it's immensely helpful. And if I can just keep you guys from getting run over short, I'll even settle for that.
Right. Absolutely. It's worth its weight in gold, for sure.
Definitely.
For sure. Yep. So thanks everyone for listening. Thank you, JJ. Make sure you guys are using stops.
Definitely. Have a great night.
All right. Have a good one.